War. What is it good for? Absolutely nothing. Money magnates and master traders. There is a headline news going around right now that the United States of America has taken action against Iran. We're getting involved in this war, potential war in the Middle East. There is going to be, or there already is, lots of fear going on in the market. We can see it reflecting a little bit on the charts. It does look bearish. SPY does look bearish. The question is, will this fear linger into this week, and can it push the market down? I want to say this, guys. You guys ever seen that movie, The Big Short? Now, everybody loves Michael Burry. Most people do, at least. They love his story. They love his story so much that they made a movie about it. A lot of people get inspired by that movie. So the question is, will the news, will the fundamentals matter? Because a lot of time this market doesn't make sense. For many years, I've seen that this market doesn't make sense. So what was my conclusion? My conclusion was, hey, Uncle Charters, this market just does what it wants to do. So many reasons to be bearish and this market will go up. There'll be so many reasons to be bullish and this market will go down. So I decided that I was going to strictly focus on the charts. Now, the thing about that movie, The Big Short, one of my favorite scenes, one of my favorite character, I forgot his name because it's been so many years since I watched the movie, but it was Brad Pitt's character. When one of the characters was getting excited about shorting the market, Brad Pitt's character had to remind that other character that yes, even though we're shorting the market and the market's crashing, there are people that are going to be losing their job. There's going to be people losing their money. There's going to be a lot of tragic things happening. And it was a powerful scene for me because you realize that to truly be a master trader, in many ways, you kind of have to be cold-hearted. Not cold-hearted in a way that you're a terrible human being, but you have to be cold-hearted in a way where you have to shut off your emotions sometimes to certain things that happen. A lot of times, the market will get you emotional and make you bearish or make you feel bearish, but you'd have to put that feeling to the side when you're getting bullish price action, because it will make sense for the market to drop, but then the price action starts going up. At that point, you'd have to make a decision. Do I stick with my feeling or do I follow the price action? And that can be a challenge for a trader sometimes, for many reasons. So you got to ask yourself today, am I going to think like a civilian and be outraged and emotional about all the stuff that's going on in the Middle East? Or will I think like a trader, put my feelings to the side and focus on the chart? Whatever decision you make, it's not wrong. Whatever decision you make and you feel is best for yourself, you're not wrong. You gotta do what's best for yourself. But as your Uncle Charters, if you're more about your feelings, I recommend not trading for a little bit and let all the fear and the news and the stuff of war, let all that stuff die down a little bit and see what happens next. But if you can put your feelings to the side and focus strictly on the charts, then today's video is for you. My video is for everybody, regardless of what you feel. This video is for you. But what I'm trying to say is, when we're focusing on the charts, we gotta focus on the charts. Despite all the tragedy, all the terrible stuff that's happening, we'd have to focus on the charts so we can attract the money. Now, if you can't focus on the charts because of all the crazy stuff that's your main focus, I recommend not trading for a little bit. That's my recommendation for you guys, okay? Now, let's get to the charts. Let's get to the reason why you guys are here. Are we bullish or bearish? As of right now, it is Sunday morning as of recording this. There's no pre-market action. We'll see what happens tomorrow morning. But based on what I'm seeing right now, we are bearish. This has nothing to do with the news, by the way. Nothing to do with the news. Just strictly on the charts, we are bearish for multiple reasons. Let's start off with the fib level of 600.4. That level was cleared recently back on June 16th. We broke it back down on the very next day. And from June 17th and so on, we treated that zone like a sell zone. Bulls failed to recapture, bulls failed to clear intraday and on the daily chart. From there, we broke down that triangle structure that I mentioned. Broke it down on Wednesday, definitely followed through on Friday. That led to a breakdown of my critical 595.5 level. This was a previous pivot high back in May 19th. Now on uptrends, you pay attention to those pivot highs and pivot lows because they serve as staircases to the upside or to the downside. In this case, 595.5 was that level that was supposed to serve as a step to push the market higher. And it pushed it up fairly high, going up to a high of 605-ish. But now, on the back test, this previous resistance was supposed to serve as the new buy zone, which it did June 13th. And it led to a bounce. But that bounce ended up being a dead cat bounce based on the context of Friday. We broke that level down. As long as below 595.5, Uncle Charters will go on record and say that I am bearish. And breaking down the 20 DMA, the 20 daily moving average, does definitely help. We're below that as well. As long as below 595.5, the bears are in control. RSI is not quite in oversold territory, so there's definitely room to go down. My targets, as long as below 595.5, is 591, 588, and 585.5. Those are my three main targets. There's a good chance we go lower than that, but for the short term, those are my targets. Stay bearish below 595.5. I do expect a $10 to $20 move to the downside, right around there. Now, if we are to get bullish, as usual, call no bottom unless we get a false breakdown setup. Not every false breakdown setup leads to a bottom, but every bottom started with a false breakdown setup. We are trading with the odds of in our favor. So do not call a bottom or try to go long unless 595.5 can recapture for the false breakdown setup. If it does, 597, 599, 600.4, and 603 would all be back in play. And there's a good chance we'll break out 603 and head back to all-time highs if that happens. So for tomorrow, 595.5 is your equilibrium level. Tomorrow, if we're above it, there's a good chance we'll bounce. Use the other levels to help you manage the trade. We clear 597, 599, 600.4. That's your sign that we're heading up higher. But if we're below it and we break down 594 and we break down 591, that's your bearish sign that we're heading down lower. We lose the we break it. We're keeping below the 20 DMA. We're breaking another critical fib level, and that's your sign we're heading down a lot lower. Triple Q also broke down its own structure of the triangle pattern. We also broke down that fib level at 527. Amazing. If we could stay below 527, definitely more downside incoming. 525 and 523, and below 523, there's a good chance below 523 we get another $10 to $15 drop to the downside. There is a gap all the way around 509. But to get there, we need to stay below 527 and break down 525 and 523. If we recapture 527, I would long if we clear 530. I would long above 530 with 531.7, 533 or higher in play. There's a good chance we head up to 536.7 plus. Tesla, that 20 daily moving average has been serving as a tough sell zone this past week, combined with that fib level around 331.6-ish. I cannot get bullish unless we clear the 20 DMA and unless we clear that fib level of 331.6. That's a bit of a ways away. Close around 322, so we have to clear 325, 328, 330, and then we clear 331.6, then I would be bullish. But we're very close to that fib level, around 320.5. We broke it down and recently recaptured it a couple of times, but that level's getting weaker. And if it breaks down again and also 319 and 315 clears, as will break down as support, that is your bearish sign. We're likely dropping another $10 to $20 back to the downside. Good chance we head back below 300, but we'll need to break down 320.5, 319 and 315, and we should get there. NVDA, once again consolidating, but that 146 fib level is where the tough sell zone is. We hit that level a couple of times, ran into some selling pressure. If that selling pressure shows bearish follow through, there needs to be a breakdown of more support levels, starting with 144, 142, 140, and 138. Now, 144 to 146 is the chop range. So below 144 and 142, get bearish. Should be good for a multi-day move to the downside. But if we clear 146, don't argue with the price action. 147.5, 150 plus incoming. Here is coin. The bullishness continue after that crazy bounce from last Wednesday. Next resistance I have is at 309.8 and 311. If both those levels clear, 317, 318.7 and 320 plus would be in play. Support is at 308, 306, 304, and 302.7. That's a fib level. If those levels fail, it is pullback time. I would favor a multi-day pullback. If 302.7 can fail, that would put 300 and 298 in play. If those levels fail as well, I'd favor a multi-day pullback. Profit taking time for coin. Here is VIX. Looks like it's consolidating a bit. That 19 support level held. So if this follow through here, 20.4, it's above that right now. But the next resistance I have is at 22. If 22 clears, good chance we head up to 24 and 25.5 plus. Get bearish below 20.4 and 19 only, especially below 19. Below 19, I would be bearish again on the VIX. Otherwise, bulls have a shot at more upside. Remember, guys, I know everything is looking crazy and hectic, but you gotta think about what's most important to you. Paying attention to the news, following the chaos that's going around, and it's understandable if you guys choose to do that. It's good to know what's going on. Or you can pay attention to that, but know when to put it to the side and separate it from your trading. Do not let the emotions that the news can invoke affect your trading. Keep your eyes on the prize. You are a master trader. Through it all, the good and the bad, when it's easy, when it's hard, we stay sheepish, keep our faith in the price action, and we follow it. That's the sheep style way. That's the money magnet way. Peace.